Joining us now to discuss the crypto markets is Glen Goodman. He's the author of The Crypto Trader. Welcome, Glen. Good to see you. So we have Bitcoin at around 23,000. Minneapolis Fed President Neil Kashkari went on CNBC today. He said that the high jobs growth in January was indication that the Fed has to do a little bit more when it comes to dealing with inflation. But it's interesting, he also said that they're not looking at the balance sheet just yet, changing the balance sheet to curb, to raise rates or to fuddle with interest rates there. What's your take here? I mean, does the Fed really have they gotten this inflation thing under control? Can they rein it in without causing a recession, or is that just inevitable?
Well, at the moment, they're in a pretty difficult situation, as far as I can see, because what they've done is, they were really hawkish for so long. We've been talking about it, of course, every time I come on here for months and months about how hawkish they are. And yet now they're in a kind of a position where perhaps they're taking their foot a little bit off the pedal. Sort of, they've given indications in recent times that we're sort of getting over the hump, and it's the beginning of the end of the hiking cycle. And so traders particularly have started looking forward to that and starting to think, we can see the end of this. And yet, just as they do that, suddenly we start getting all this economic data, like the Fed guy said, that's running a little bit too hot. The jobs data is hot as hell. Frankly, you've got the job openings still so high, almost at a record high, while unemployment is still very low. And it's actually interesting because you may remember a month ago when I came on here, we were talking about this because there were a load of tech layoffs at the time. And you were asking me, do you think that, we're going to see more unemployment? Because we're hearing anecdotally about all these tech layoffs, Google and all the other companies, huge tech layoffs. And I was saying, maybe what might happen is that these tech layoffs, the people who are being laid off because they're so highly skilled, they're going to get snapped up by other companies really quickly. And so that was a possibility. And that seems to be what's happening now. We've got those high job openings, low unemployment. Looks like people who get laid off just get new jobs quick as anything.
But can they do all this without? Can they do all this without ultimately, I guess, unloading things on the balance sheet? I mean, the whole thing is that he said that they're not even discussing it at the Fed at the moment. But do you think that ultimately that's kind of like the big thing that's sort of sitting there in the sidelines here? Trillions of dollars on the balance sheet. That if they were to sell it into the market, would ultimately raise rates that way and create, if you will, the slowdown necessary, perhaps, to rein in inflation.
Yeah,
is that the only?
Maybe.
Is that the final solution? Yeah.
If I sound skeptical, it's kind of because I am. I guess I think that their techniques. I think they've just been too late every time. Every time they do anything, they're just always behind the curve, and they've been messing it up all the way along. And I know they don't mean to. I know they're doing their best at the Fed. The poor Fed guys. They're doing their best. God bless them.
Yeah,
they're kind of messing it up. And, we've got this high, I'll just mention quickly, we've got ISM services data that came through last week. This is survey data, but it was quite strong. It showed basically that purchasing managers are seeing expansion and looking forward to expansion a lot more than they were just a month previously. And so, with that and the jobs data, it's all looking hot. At the same time, the Fed this is my prediction, at the moment, though obviously predictions change as new data comes in. At the moment, it seems to me like at some point the Fed's going to realize that everything's running too hot. Inflation is probably going to take off again because the economy is running so hot in America. So inflation will probably take off. The Fed are going to, cack themselves, for want of a better phrase, and go, oh no, and they're going to start they're going to start putting out some intimations that they're going to be raising rates to a higher terminal rate than has previously been thought by the market. The markets may then react in a very negative way to that. So that might be when we get a big plunge down in both stocks
volatility
and in cryptocurrency.
Meanwhile, just switching gears here, so the Bank of England is starting further research and development work on a digital pound for purchasing goods and services, and that's something that's likely to be needed in the future, according to a regulator saying that on yesterday. So what are your thoughts on this new development?
Okay, well, first of all, before I get onto that, I just want to make the quick point that sort of in addendum to what I was just saying there, I don't expect the markets to necessarily start crashing anytime soon. Okay, so sorry if I alarmed anybody there, but I think that it could be quite a while before the Fed, because data takes months and months to come through. It's always lagged. It could be a long time before the Fed finally realizes that it's not hiked anywhere near enough, and that it needs to hike more, and that it needs to tighten monetary policy. So, we could see this rally that we're currently seeing in stocks and crypto continue for quite a while before it actually ends in possible disaster. So yeah, let's enjoy things while they last. I certainly am at the moment enjoying them anyway. Moving on to the digital pound then. Yeah, so the UK government, like the EU, like America, they want their own digital currency. Why do they want their own digital pound? Mainly because they're terrified of private sector companies taking over the sort of management of the pound, as it were. Basically, what we're looking at is a possible future where companies like, say, Amazon or Apple or whoever develop their own stable coin that's pegged to the pound. That's what governments are scared of. They're scared that if private companies develop decent stable coins that people start using a lot, because they're already obviously using these companies like Amazon a lot for purchasing purposes. So Amazon say this is all hypothetical, but let's say Amazon makes it really easy for people to switch to using their version of a digital pound. Then of course Amazon will be the one hoovering up all the data, as they do at the moment, and that will mean that the British government is not able to hoover up data on who's spending what where. They won't have control over the units of currency, and if we want to get dystopian here, they wouldn't then have control over switching on and off people's units of currency, or deciding what those units of currency can be spent on, things that are good for us. For example, some people think that governments might be tempted to use digital currencies, central bank digital currencies, in that way. So this really is the main reason why, in my opinion, why governments, why the EU, why the British government and why the American government are so keen on having their own digital currencies, is because they want that data and they want that power over people's spending.
The dollar will the digital dollar will insist that I only buy kale.
Yes.
So it's a choice between having all my financial data seen and surveilled by private companies or the governments.
Well, wouldn't it be lovely if decentralized stable coins became the de facto currencies that most people are using? Wouldn't that be lovely? But will it happen? Nice? I mean, governments will try and stop it. Let's face it.
Yeah, we saw what happened with the internet. All right, Glenn, thank you so much for joining us. That was Glen Goodman, author of The Crypto Trader.